As has been the case for some time, the MPC's forecast is conditioned on the assumption of a relatively smooth transition to an average of a range of outcomes. This is not a prediction, but a simplifying assumption which broadly reflects how UK businesses and households are behaving. The committee recognizes that the economic outlook could be influenced significantly by the response of those businesses and households and financial markets to developments related to the process of EU withdrawal. And those negotiations are now entering a critical period, with the EU and UK both seeking an agreement by the end of the year. Although the range of potential outcomes is wide, what matters for monetary policy is how people react to these developments and how these reactions affect the balance of supply, demand, and the exchange rate. Thus far, British households have been resilient but not indifferent to Brexit news. Consumer confidence has been little changed in recent months, below its pre-referendum levels, but around its longer-term average. Household spending has been increasing broadly in line with real incomes, though household borrowing for major purchases has slowed and the housing market is subdued. Financial markets, particularly sterling, marked down the UK's relative prospects quickly and sharply. Risk premia on sterling assets have increased somewhat in recent weeks. Since the referendum, business investment has picked up, but businesses have invested much less aggressively than usual in response to an otherwise favorable environment. There are signs that business sentiment is softening again, with references to uncertainty in their conversation with bank agents and policymakers spiking sharply, and concerns about Brexit reported in surveys such as the Deloitte CFO survey, now at their highest level since the referendum.